welcome to The Sound of Economics, a podcast from Bruegel, the Brussels-based think tank specialized in economics and economic policy. I'm Nicolas Véron. I'm a senior scholar at Bruegel, and I'm very pleased to bring you today's episode of The Sound of Economics. Today is a conversation with Steven Maijoor, who is the chairman of ESMA, the European Securities and Markets Authority, which was created in 2011, so it's now an established player on the EU scene. Hello, Steven.
Good morning, Nicolas.
Thanks for joining us. We're going to be talking about the capital markets in the European Union, and I should say maybe in the EU 27 after Brexit, assuming Brexit happens, and the role of ESMA here. So this will be a free-flowing conversation, but let's get started, and let me ask you, is ESMA ready to assume a much greater role in direct capital market supervision for the EU? How do you think about your ability to scale up given the necessities of the post-Brexit world?
Well, Nicolas, as you rightly say, we were established in 2011, and it means that we now have basically a 6-year track record on ESMA. We can now see how the system functions. At that time, in 2011, it was really innovative to establish ESMA and also the two other authorities. And as I just said, we can look back and how does the system work, but also are there weaknesses in the European capital markets. And as you rightly say, in addition to that, there is the Brexit. In the current course, the UK will leave the EU in 2019, and with that also the largest capital market of the EU will move outside of the EU. So I think that gives a very good background in terms of thinking about how should we develop European supervision further, and should we strengthen indeed ESMA also for the Capital Markets Union. I think there are a couple of points to be made on that. Well, first of all, we have made very good steps with, for example, the single rulebook, the fact that we now can make at EU level technical standards that are in principle directly applicable across all member states, I think is a big step forward. And also I think ESMA has shown with its supervision on credit rating agencies and trade repositories is that indeed you can very effectively and efficiently do supervision in capital markets at EU level. I indeed think it is time to take a next step with ESMA. One important element, and also now having the experience of the past 6 years, is that you see is that the fact that there is the freedom to provide services and the freedom to locate yourself anywhere as a service provider in the EU results in a weakness in terms of is the national regulator of that financial service provider sufficiently taking the risks into account of other parts of Europe. So the fact that we have the freedom to provide services in the EU requires sufficient strength at the center. The other main part, of course, is with the biggest capital market moving outside of the EU. Whatever the outcome will be, there will be more barriers, and there is a strong need to develop our own capital market.
Well, as you mentioned, trade repositories, I have to say for disclosures that I'm involved with one of them, but that's not the context of our conversation today. What would be your ideal vision? If you had a magic wand and you could draft not a new treaty perhaps, but certainly new EU legislation, what would be your top 3 priorities for reform?
I might have 4, so
okay.
allow me
fine.
to make 4 as possible. I think first, one of the key elements of the Capital Markets Union is about removing barriers. And of course, that is a very old story. It is the story what Europe is about in the area of economics and finance. But that work should continue. It has paid off. And I will truly hope that we have gradually moved from directives to regulations, which in itself is a very strong measure to reduce barriers. And I would truly hope that, let's say, in 10 years' time, we only have regulations in the area of capital markets. I fully understand.
So no FID, no MiFID, no MAD, only MiFIR and MAR.
So we're now in the middle of implementation of a whole regulatory reform, and that is precisely the reason that I said in 10 years' time. I think the focus now of regulation and supervision should be on the implementation of the regulatory reform. So I'm a bit careful to say, let's rewrite that again. But I think the long-term direction should be moving away from directives and going to regulations.
So that's number one.
That's number one. Then going to, let's say, ESMA, more ESMA itself. The fact that the biggest capital market will move outside of the EU is a reason to think about how should we supervise this very large financial center outside of the EU, but with many clients, customers in the EU 27, and how do we make sure is that the risks specifically for the EU 27 are appropriately addressed. That is the reason that we have argued we need to have supervisory powers over third country entities. The Commission has published the proposals to do that for CCPs, but I think we should...
Central counterparties?
Yes. Sorry for the bureaucrat tendency to use acronyms. But I think we need to think about extending that concept also to other market participants, for example, credit rating agencies, possibly trading venues, benchmarks. So stronger regulatory powers over third country entities. Let's first. I think that what is very important is that the focus here is on infrastructures, where if you would, if you would move them, you get fragmentation. So I think that is, and I think the CCP is a very good start coming from the Commission. I would focus initially on let's say infrastructures like trading venues, benchmarks, credit rating agencies. So that is important, and that was the second. And sorry for being a bit long, Nicolas, but it's EU supervision and regulation is complex. Then I think we should think about moving the balance. We currently have a very substantial part of national supervision, a relatively modest part of EU supervision with credit rating agencies and trade repositories. That will be the model for the foreseeable future, but we should move the balance in the years to come. My board also have suggested that indeed critical benchmarks in the EU, CCPs and certain reporting entities should come under direct supervision of ESMA. We have said that in the context of the ESA review. And finally, and then I will stop, and that is the fourth one, is stronger convergence measures. So accepting and understanding that we need to have national supervision, we still need to have at European level sufficient tools to make sure that the national supervision is consistent. And that is what I call convergence tools.
What does that mean in practice, convergence tool? How do you make sure that enforcement actions, supervisory actions, administrative decisions are consistent?
The interesting thing with convergence is that it's an enormous mixed bag of tools. And because this is about trying to create a common supervisory culture, trying to get to common and consistent decision making, and so this varies from guidelines and Q&As to assessments of national supervisory practices, what we do with peer reviews, but also in some cases the possibility to take certain decisions at EU level. For example, currently in the area of CCPs, changes in the models for margins also need to have the approval at EU level. So you need to go there area by area. What is the best mechanism you can have at tool you can have at European level to ensure consistent supervision?
So if I get you right, there is a lot of interplay between your number 3, strengthening the role of ESMA, and your number 4, ensuring convergence and consistency of practices by the national authorities, right?
Yes, and to be, we have already done a lot in that area in the past years. We regularly publish peer reviews on our assessment of national supervisory practices. We have published numerous Q&As and guidelines to make sure is that the EU law is applied as consistently and implemented as consistently as possible. So we have already a quite a good toolbox, but I think it should be expanded, and you need to decide on that area by area. But in general, it also, for example, relates to the powers that ESMA has to ask for information from national supervisors.
So maybe a last question on this, and the key question of the future role of ESMA. Do you feel you are, I'm not talking really about the day-to-day business, but in terms of structure, do you have the right designs, the right governance, the right funding to play a bigger role and be more directly involved as a supervisor in an increasing number of market segments? Or what would you suggest? I know it's difficult for a chairman to suggest reform for your own organization's governance and funding, but do you have any suggestion on how this could be possibly improved if there is something to improve?
I think the biggest issue, and let's focus on that one, is really being resourcing and resources. I think, and I know there is no regulator in the world that will say that he or she has sufficient resource, but I think by all reasonable standards is that ESMA has just way too few resources. That is has risks for the implementation of rules and regulations. Of course, ESMA has been in a very entrepreneurial spirit in the past 5-6 years, and so the demands on our staff, my staff, has been very high, but you cannot build a long-term viable institution on, let's say, an entrepreneurial spirit where you ask basically the impossible of your staff. So that we have said consistently we don't have sufficient resource, and so I would truly hope that part, with the publication of the next step by the Commission and the publication of their response to the ESA review, is that they make a good step there.
Very last question, that means more money. Where should the money come from? Should it be EU money? Should it be money directly taken from the industry? What's your thinking about that?
Well, I think I find it very logical is that if you do direct supervision, or let's say quasi-direct supervision, I think it's fair and reasonable to charge supervised entities. My experience is that although those supervised entities, they don't like it, they understand it, they understand the rationale and the logic. I think in that area we can go further. There are a couple of areas where we do basically direct supervision, and we don't charge them. For example, third country credit rating agencies that get a recognition now at ESMA, we don't charge them. So I think we should expand that model and see how we can increase the base. But also I can fully see that the policy part is always the more difficult part in terms to what extent is it reasonable there to charge industry. So in my expectation, it would be a quite similar model as we now have, but at a higher level and possibly with some different, the sizes of the components will be different.
Thank you so much, Steven, for taking this time to speak. And thanks for listening to The Sound of Economics. If you are interested in more work from Bruegel, you can find a range of blogs and papers on our website at www.bruegel.org. I hope you'll join us again for The Sound of Economics.